What's up, everybody? My name is Jason, and welcome to Small Biz. In today's video, I want to give you at least 3 reasons why the stock market does not want to crash, starting with number 1 and what happened last night with oil. Shortly after futures opened at 6 p.m. East Coast time, we shot up and through 100, and for most of the night, we were hovering in and around 109, 110, but we ultimately got as high as 116 and a half. And have subsequently seen a massive 25-point drop in oil. Last trade 91 on the nose as we approach 3 o'clock East Coast time on this Monday afternoon. Anyone who's been in the weeds for more than 30 years like myself, half of that as a broker from 1993 to 07, can tell you that is a classic parabolic top blow off. I can almost guarantee there's no chance in hell that oil is going back up and through 116 unless we have a major disaster. China's on the phone right now. Gotta be totally embarrassed how we mowed through their air defense systems in less than 48 hours. And they're telling Iran, don't you dare bomb those ships. Don't you dare bomb those ships. Why? They get half their oil through the Straits of Hormuz. We are much more energy independent. We can survive a hell of a lot longer than they can. They cannot afford that strait to be shut down any longer than a few days to a week tops. So I'll be shocked and the first one to admit I'm wrong if they start bombing the piss out of our carriers that are escorting tankers through the Straits of Hormuz. The world, the big money, the futures market, etc., is telling you as we sit at 91, way down from 116, the worst of this war is over. We probably have, if I had to guess, another 2 weeks tops from this coming Friday of bombing the living shit out of them. We've already sunk virtually all of their Navy, taken out 90% of their air defense systems. They may, and I don't know if this is the right thing to do or not, send in some special forces to try to sniff out where that enriched uranium is, or at least have the Israelis do most of it. But the oil market combined with the VIX is telling you the worst is over. Anytime you get up and above 35, and we were at 35 and a quarter this morning in the VIX, aka the fear index, and you quickly reverse within 48 hours and go back down under 25, last trade 26 and a quarter, that's an almost guaranteed short-term bottom. So I'm not saying the low of 2026 is in. I am saying the overnight low of the Qs, which was 581 and change, last trade 600 on the nose, is it. So the first reason why the stock market does not want to crash is oil combined with the reversal in the VIX. The second reason is Bitcoin's bullish divergence. It told us, rightly so, once again, a few months ago, when it rolled over from all-time highs at 126, that equities were about to have a problem, and we're in the midst of one right now. And if you're inside of our Discord, and you can click the pinned comment below, I've been saying all month long, look for a bullish divergence in Bitcoin. Look for Bitcoin to gain strength, bottom, and start to break out well before equities hit their lows. And that's exactly what happened. When we were north of 116 in oil last night, when the VIX was north of 35, what was Bitcoin doing? Solid as a rock at 67 and change. And at one point this morning, we got up close to 70K. We break up through that level, and then you've got the prior high and the 50-day moving average at 74. I can almost guarantee that low of 60K in small change in Bitcoin is it, probably forever, or at least many, many years. And the third reason, which coincides with what I already said, is the price action in the Qs. Probably a half a dozen, if not more times over the last few weeks as we try to get down 3, 4, 5, 6% from all-time highs. Half the drawdown is eaten up same day before the close, right? We were way down at 581 and change overnight. It looked like the end of the world, and then we come roaring back, bounced over 20 points as oil came down more than 25. That to me means that the institutional buyer in particular is real. They're looking to soak up as much stock as possible. And one of the reasons for that, in my opinion, is last year was the worst for hedge funds in more than 30 years. Did you know that? 82% of the fucking clowns on CNBC didn't even match the S&P 500, which was about 17% annualized on the year. Can you imagine if we only made 17% a year? In closing, I've got people quitting by the droves. And you know how much we were up in the last 8 months? 800%. 97-2. Now, some people are claiming their averages aren't as good as mine. The main reason for that is they're going way too aggressive out of the gate. They're not adding small appropriately. And as I once again explained inside the Discord, I'm a single guy, no wife, no kids. I can add 7 to 10 grand a month into my E-Trade account. How am I able to do that? Do the math. We have a $350,000 business on 185 members. My bills are $11,000, $12,000 maybe, $13,000 if I'm having a really good time a month. So I'm able to add a couple of grand every week. That means my position size is constantly expanding, which means I can bring my average down further than most of you. But even if your averages, and I'm talking to one guy in particular who was with us for 26 fucking months and wrote a hit piece inside the Discord over the weekend before he quit. Even if your average was half mine, you should have made 800 or 900% over the last 26 months. So ladies and gentlemen, if you can't follow directions, if you can't take a fucking punch, and if you're not prepared to buy a stock 10, 15, even 20 times or more, just like the Bed's hedge funds, including Warren Buffett do, don't waste your time and fucking money clicking that pinned comment below. And until next time, hope that helps you. Thanks for watching.